Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for making time on this Friday.
Good afternoon.
Well, stocks in New York continue to rally, 0.5% on the Dow, 1% on the S&P, 1.5% on the Nasdaq. With the European Central Bank raising interest rates by more than expected, they've taken away some of this upward pressure on the dollar. What's the story in the global markets?
Yes, as you said, U.S. market continues to show gain. It's a third consecutive session of gain on Thursday. Dow adding 150 points and S&P 500 and Nasdaq climbing 1% and 1.4% respectively. Particularly with the corporate earnings coming through, resulting into quite a bit of a sharp rise of companies that's showing good results. Particularly for Tesla, it rose nearly 10% following the EV makers showing upbeat earnings numbers. Clearly, under the inflationary pressure, the company can transfer the prices, can have a much better result than anyone else, and therefore showing quite a bit of a strong rally. However, on the flip side, American Airlines and also Carnivals, these companies, the travel-related companies, are showing that they need to raise more money in order to sustain the competitiveness. So therefore, it's causing the dilution for the shares, and therefore, share prices are showing quite a bit of a sharp drop because of the dilutions. But in any case, if you look at the futures market, also showing somewhat a bit of a drop today because of the Snap coming out with the results that showing quite a bit of a drop in terms of top and bottom line numbers, and the Snap prices are plummeting by 27% in the trading after trading days. So overall, market seems to be quite volatile because they are uncertain about whether the third quarter results are going to be coming in weaker than expected due to the possibility of economic recession. If the economy is in a direction for recession, then earnings numbers are not going to be coming through positively in the futures, and therefore people might be thinking that market needs to further correct after the rally. But we think that the fundamental case for the U.S. economy is still intact, that the economic recession on the nominal level is not going to happen until probably end of next year or the beginning of 2024. If that's the case, market it will be probably in a good position to do further rally till the beginning of next year. So for the time being, we're recommending investors to be a bit cautious in terms of dumping the shares, but rather holding on to the shares.
Well, today, Korean stocks closed lower, coming off a gain yesterday. Most of the big names were down, with the exception of carmakers Hyundai and Kia. There was some net buying on the KOSPI by foreign investors. Tell us about the domestic market.
Yes, if we look at the overall market trend, it is quite doubtful to say there's any kind of directions. The Korean market fell for KOSPI about 0.6%, and also Nasdaq is down by 0.7%. It seems that the U.S. market is affecting not necessarily positively for Korean market because of the currency movement. If you look at the Korean won, it has continued to depreciate. It shows somewhat of a appreciation at the beginning of trading day, but now it's back up to 1314.5 won to dollar rate. Clearly, there's uncertainty about the consumer debt issues and also the currency swap issues. All that is affecting not necessarily positive for Korean market. If you look at the foreign investors, they are probably not really playing the market. We saw slight net buying of KOSPI and slight net selling of Nasdaq and a slight net buying of futures market. And the local investors, retailers are the net buyers, and the institutional investors are net sellers. So continuously, there's a lack of direction for Korean market. We need to see dollar depreciating in the future in order for the Korean market to further rise. We think that that might happen as the ECB raised interest rate higher than expected, and the U.S. Raising interest rate might slow down after the July 27th. So if there is a room for Korean won appreciation, that might happen in August. In that case, we think that Korean market can be in a position to do a rally. But for the time being, the volatility is expected to continue.
Meanwhile, oil prices coming down again with expectations for a decline in demand. Also, some supplies coming back on from Libya, Russian gas flowing again. Texas Intermediate down 3% or more. We've actually seen gasoline prices come down significantly here in Korea. What do you see happening with oil prices?
Yes, quite a bit confused about the oil prices when Biden came back from the meeting with the Saudi Arabia. The Saudi Crown Prince Mohammed bin Salman. The people were saying that the results were not really necessarily positive, that the new production from the Saudi Arabia might not be coming through, and therefore that might result into quite a rise in terms of the oil prices. But it seems that after that a slight movement, we start to see quite a bit of significant drop of the oil prices. Now, WTI crude futures are around $97 per barrel, and also the Brent is at around $105 level. All means is that supply and demand side is quite confusing at this point in time. In terms of the demand side, it seems to be slowing down a bit, even despite the weather conditions. But if you look at the supply side, U.S. production is at the record level nowadays, creating quite a bit of a ample supply, resulting into higher inventory buildup. So that is resulting into the oil prices decline recently. Overall, we think that the supply and demand picture will be more in favor of oil price going down rather than going up, because the productions are coming in line or quite aggressive, while the demand side is weakening because of economic slowdown and also transfer of gasoline-based to electric vehicle-based overall automobile market. If that continues, we think that demand for the oil is going to be relatively less than expected, and also supply side is continued to be pumping up as we've seen from the U.S. side. All that means that we think that oil price is not going to be going up in the future, but rather stabilize or go down. More like a fair price of oil will be somewhere between $70 to $80 per barrel. Right now, it's at $100 somewhat. We think that the trend is expected to slow, and that we will have a quite positive implication for the inflationary pressure in U.S.
Well, that will be a big relief if that's the way it plays out, Mr. Yu. Thank you, as always, for coming on the program on this Friday. We appreciate it. Have a great weekend.
Thank you very much. You too.